In the post-war period, UK house prices soared. Even if we adjust for the effects of inflation, since 1960, house prices have risen 600%. It's hard to underestimate the economic and social significance of such a large rise in house prices. "You can't go wrong with housing" is a familiar refrain we often hear. But it wasn't always like this. Between 1850 and 1950, nominal house prices increased only very marginally. Real house prices were effectively stagnant. So the big question is whether the post-war boom in house prices was a unique experience never to be repeated. Whilst we often focus on short-term effects of higher interest rates, there are also 4 or 5 long-term underlying factors which may be on the verge of turning against the housing market. It means that the 4 or 5 decade-long boom in house prices will never be repeated. And for young people struggling to get housing, the end of the housing boom can't come soon enough. But is it really the case that housing won't be a good investment? The boom in real house prices occurred across the globe, but you can see that the UK saw some of the biggest increases in real prices. The boom in prices was due to 4 or 5 factors. Firstly, the population growth was very rapid in the post-war period, especially increased demand for urban living. Not only did the population rise, but in the post-war period there was a sharp fall in household size, a decline in number of children, more single people. And this meant that the demand for households was growing at a faster rate than the population. And this increase in demand for housing meant that many countries reached a tipping point where housing supply could not easily be accommodated by building more. Because up until the 1950s, we were able to expand the size of cities through railways and then the use of the car. But we've reached a limit to what we can build, and then we start to get this shortage of supply, which has pushed up prices. Also, with rising population densities, the post-war period saw a rise in the powerful NIMBY voting bloc, a plurality of voters with little interest in building more houses. And it didn't help that many countries like the UK were increasingly picky about where and how to build. The UK has a particular reluctance to build houses vertically, with tower blocks often associated with low-quality social housing. Many that we built in the 60s have been demolished already. However, to some extent, some of these factors that have been driving house prices in the long term are on the verge of going into reverse. And this is before we get to the shock of higher interest rates, which have contributed to the 14% fall in real house prices in the past couple of years. So it means that the prospect for housing could look very different in the next 50 years. Demographics do influence house prices, and the population growth of a post-war period was very significant. However, this is predicted to go into reverse. Fertility rates are falling across the world, but Europe in particular. The European population is forecast to fall quite soon, and when population falls, house prices can fall quite dramatically because there will be a surplus of housing compared to the population. Now, the UK is something of an outlier in this regard, because due to high migration, the UK population is forecast to keep rising until 2050, according to the ONS. Now, since ONS made these forecasts, recent evidence suggests that fertility rates may be falling quicker than past forecasts, and maybe migration levels will fall quicker than some predict. But whatever happens, at least in the short and medium term, the UK is still going to contend with a rising population, so we may continue to be one of the worst housing markets in the world because the population continues to grow. Another factor that pushed up prices in the post-war period was a rapid decline in the household size. But even this is starting to reverse, with for the first time we're seeing a slight increase in the average household size. Often it's children living with their parents for longer, people not being able to get a house, so you could say it's the housing crisis itself that's causing a rise in the household size. But perhaps more importantly than these demographic factors we've mentioned, the gross rental yield has fallen in the past decade, but researchers suggest that the long-term yield of housing has fallen at a greater rate. The result is that when short-term interest rates are substantially higher than the return from housing, then demand is going to be relatively weak. Given the prospect of limited or even negative capital gains, housing is not the same kind of exciting investment it was back in the 60s, 70s and 80s. Now, the past year has been disappointing for those who hope for a rapid revaluation of house prices. The logic was that higher interest rates reduced affordability and increased mortgage payments of first-time buyers, and it's certainly risen as a share of income. First-time buyers are also needing to spend more on a deposit, which is often cited as a major barrier to being able to buy. Now, at this stage, you could ask, if there's been a substantial growth in wealth in recent decades, will wealthy investors keep buying housing to prop up the housing market? And maybe to some extent, certainly large institutional investors are an important player in the UK property market. But with long-term interest rates on government bonds rising from 1 to 4%, investors have much more alternatives for how to invest their money. For example, investors can buy risk-free assets like bonds without the same illiquidity, tax rates and inconvenience of buying property. With long-term yields of 2.5% and limited scope for real house price growth, it's not going to be the same gravy train of investment that it was in the post-war period. Another good question is, won't wealthy parents help their children to buy? And the answer is yes, to some extent. I think it's a reasonably significant part of the UK housing market, family and parents helping their children to be able to buy and get a bigger deposit that otherwise might have taken up to 20 years to get the size of deposit required these days. But although parental wealth is a factor in the housing market, but on its own it can't cause a long-term boom in house prices. If house prices stagnate, housing wealth will also stagnate. And importantly, not everybody can rely on parental family wealth to help buy a house. The mortgage market is still very important, and this has stretched affordability to the actual absolute limit. Also, another important factor in the housing market was that in the post-war period, an easing of getting credit, an ease of getting mortgages, was very significant for helping people to buy a bigger house, more expensive house. Strict mortgage lending we saw back in 1960 was gradually eased over the decades, culminating in the very loose mortgage lending of the late 2000s. And it's not a coincidence that real house prices peaked around the great financial crisis of 2008-2009. Since the great financial crisis, there's been a very real change in mortgage lending, with new stress tests making it quite a high bar to get a mortgage. Now, things like Help to Buy did temporarily boost buying, but basically this source of house price growth from stretching mortgage lending has really come to an end, because it's hard to see any renewed loosening of mortgage lending criteria we saw in the boom years of a credit crunch. Now, the fundamental state of a UK housing market is that although affordability has dropped from very high income multiples of 9 to 8, it's still at the very limit of affordability. Now, there's probably going to be no crash in prices, but also there's not going to be no quick bounce in prices, because this would require a very sustained growth in real incomes. And that's another factor to actually consider. Will we ever see a return to the post-war period of rising real incomes? Because don't forget that real incomes is one of the biggest factors driving demand for housing in the long term. Also, another interesting question is whether the era of NIMBYism is coming to an end, because we've seen a fall in home ownership, especially amongst the young, and the high cost of renting means that there's a much bigger voting bloc who want to see home building as a priority. Certainly the current government, their voting bloc tends to be homeowners, people who are not so keen on building houses. But a Labour vote would be quite different. They would have a much greater share of voters wanting to see new development, and that may be a factor in causing more houses to be built, which would help keep prices down. The other big issue is interest rate, and the question of whether the lower interest rates of the 2010s was an aberration or something we could return to. I've talked about this in the past, and I'm definitely aware that we could return to low interest rates, but recent evidence suggests that we could be edging towards stickier inflation, stickier interest rates, and as banks certainly don't seem keen to cut interest rates from their current highs. And so this would also really impact the housing market if 5% was the new normal as opposed to 0%. So it's definitely very hard to see a quick improvement in affordability. But taking a bigger picture, the boom in house prices we saw in the post-war period, especially from 1960 to 2010, it's very hard to see a repeat of that. Even though there's these issues of rising population in the UK and shortage of supply, we're at the stretch of affordability, and demographic changes and social changes and economic changes were unlikely to replicate what we saw in that post-war period. So this isn't to say don't buy a house. There can still be a reasonable yield, it can be a part of the portfolio, but the scope for very rapid growth in real prices and an easy way to make real capital gains, it's hard to see for the foreseeable future. And in the long term, if population starts to fall, well, that would really throw a cat amongst the pigeons in the housing market. And what about the prospects for the UK economy? This video goes into more detail about whether we'll ever see rising real incomes.